Hi, this is Dan Patterson with Berkshire Hathaway. 6 years ago, prior to starting my career in real estate, I was a lender for 25 years. Today, I want to give you a few tips on the pre-qualification process for home buying. There are two reasons that are very important that I feel. Number one, before you find a real estate agent and go out and search properties, take the time to get pre-qualified, because why go out, find the ideal property that you know is perfect for you and maybe not qualify for it. That's a big disappointment and something that can be easily avoided. You may know based on your situation that you have excellent credit, excellent income, and that you qualify for the mortgage. But that brings me to the second point. The seller does not know that. In fact, may not, and possibly does not know you at all. And they do want to know that when you make an offer on their property, that you're fully capable of completing the purchase and fulfilling the promises that you've made to them. So that's the second reason. So the first step is to find a lender. And my suggestion always will be that if you have an existing relationship with a lender, that you begin there. There'll be a lot less surprises. They know your situation. They're going to be able to put it together for you and tell you exactly what you can and cannot do. So be prepared when you go in to talk to them. They're going to want to know income, number one. And if you're an hourly or salary person, or if your situation includes overtime pay, they need to know all of that. And they're going to look for gross monthly income, not the amount that you take home. Because everybody's situation is different. You may have withholding for a 401k or health insurance or child support if that applies. So they want to know the gross monthly income. And once they have that, the second thing they need to know is your total monthly installment obligations. Now, these are things like if you have an existing house, they're going to want to know your house payment, including insurance and taxes, installment auto debt, credit card debt, just fixed monthly obligations. You don't need to worry about monthly utilities, the water bill, the gas bill, that sort of thing. They don't need to know those, because what they're going to establish is your debt to income ratio. And they're going to take your fixed monthly obligations and add to that the dollar amount of the maximum house payment that you could fit into that ratio. And in turn, they'll convert that monthly payment into a maximum total dollar amount of a loan that you could qualify for. Okay, so once you have that in place, they're willing to issue you a pre-qualification letter. From a seller's point of view, an offer that they get on the table that includes documentation that shows that you're pre-qualified is a bonus to you. They're going to be more willing to negotiate and get the deal done in the manner that you want it done in. So those are the steps for pre-qualification. Next time I see you, I'm going to give you a few hints for things to do and not to do once you get your ideal property under contract. Thank you.